Welcome to Finademy course of income tax and how to lower it. Our topic today is tax deductions, credits, and exemptions. Use the link in the description to download the app on the App Store for more courses and free practice tests. Number 1. One of the most confusing aspects of taxes is all the various deductions, exemptions, and credits you can take advantage of if you know how. Tax deductions allow you to deduct from your income before you calculate the amount of tax you owe. This lowers your taxable income, ideally pushing you into a lower tax bracket. Tax exemptions were effectively discontinued until 2025 as part of the Tax Cuts and Jobs Acts in 2017. Deductions have been increased to compensate for the loss of personal and dependent exemptions. Tax credits are dollar-for-dollar reductions in your tax bill. You subtract tax credits from the amount of tax you owe. Answer the question. What can directly reduce the amount of tax you owe, dollar for dollar? A. Tax loss harvesting. B. Tax deductions. C. Tax exemptions. D. Tax credits. The correct answer is D. Tax credits. Number 2. When filing your personal income tax, you have two options for deductions. Taking the standard deduction. Using itemized deductions. You can't take the standard deduction if you itemize. And you can't itemize if you take the standard deduction, so it's important to determine which one benefits you most. The standard deduction is a single amount that is deducted from your total gross income. The resulting number is your adjusted gross income, AGI, and that's what you use to determine your tax bracket and pay taxes. Answer the question. Which of the following is not true? A. You can take both the standard deduction and itemized deduction. B. The standard deduction is a single amount that is deducted from your total gross income. C. Your adjusted gross income, AGI, is what you use to determine your tax bracket and pay taxes. D. Tax deductions allow you to deduct from your income before you calculate the amount of tax you owe. The correct answer is A. You can take both the standard deduction and itemized deduction. Number 3. The amount of your standard deduction depends on your filing status. Below is the standard deduction by filing status for tax years 2019 and 2020. Answer the question. For the tax year 2020, what is the standard deduction for those married filing jointly? A. $12,200. B. $12,400. C. $24,400. D. $24,800. The correct answer is D. $24,800. Number 4. Itemized deductions are individual tax deductions you can take in lieu of the standard deduction. Common itemized deductions include mortgage interest paid, property taxes, medical expenses, and charitable donations. While choosing the standard deduction for your filing status is easy, you may be able to save more money by itemizing your deductions. There are also times you may not be eligible to file the standard deduction, such as if you and your spouse are filing separately and your spouse is itemizing their deductions. In that case, you're required to itemize as well. To make the decision about whether to itemize, you have to do some math. If your itemized deductions add up to more than your standard deduction, you can save money on your taxes by taking the extra steps to itemize your deductions. If they don't add up to more than your standard deduction, stick with the standard. If you do itemize, you have to use Schedule A on the Form 1040 tax return. Answer the question. When should you itemize your deductions? A. When your itemized deductions do not add up to more than your standard deduction. B. When your itemized deductions add up to more than your standard deduction. C. When you and your spouse are filing separately. D. When you and your spouse are filing jointly. The correct answer is B. When your itemized deductions add up to more than your standard deduction. To learn the full course, please download our free app Finademy on the App Store. Thanks for watching. Don't forget to like, share and subscribe to our channel for updated videos every week.